The dock reader beeps twice. $11.47 an hour. You count the register before your shift because Gerald taught you that on day one. You don't ask why, you just do it. Your first paycheck arrives on a Friday. Gross, $412.92. You open the stub before the envelope is even flat on the table. Net, $339.18. The difference sits there. $73.74 gone before you touched it. Federal withholding, FICA, Ohio state tax, line by line, like someone already knew what you'd do with the money and decided against it. You don't feel angry, you feel something flatter. A low, constant hum of arithmetic running underneath the rest of the day. Gerald has worked the floor for 22 years. He doesn't explain tax brackets. He doesn't mention the IRS. He slides his own pay stub across the break room table, face down, then flips it over. Says nothing. Lets you do the subtraction yourself. You do it 3 times to be sure. The first dollar you earn and the first dollar you keep are never the same dollar. The shift. You stop thinking about your salary. You start thinking about your withholding. Everyone on this floor gets the same stub. Gerald says something different than yours. More zeros, same shape. Same boxes, same categories, same law, different doors. You fold the stub into your back pocket and finish the shift. 7 years later, a promotion letter on the kitchen counter. $80,340 base salary. You do the math before you read the whole page. Your old bracket, 22%. Your new one, also 22%, for another $10,467. Then 24% past that. Brianna reads the same memo 2 desks over. She turns down a Saturday shift that would have paid $340. Not worth it, she says. Just pushes me into the next bracket anyway. You don't correct her. You open the bracket table instead. Actual IRS figures, not the ones people repeat at each other in break rooms. Married filing jointly, 2024. 10% up to $23,200. 12% up to $94,300. 22% up to $201,050. Brianna's shift would have been taxed at her marginal rate, not her whole check, just that slice. You say nothing. Your jaw stays still. You fold the table printout and put it in your desk drawer. A higher bracket taxes the next dollar, not the ones you already have. The shift. You stop fearing the next bracket. You start reading the bracket table. At lunch, Brianna checks her phone twice, sets it face down, checks it again. She doesn't ask what you know. You don't offer it. Same law, different doors. Your new paycheck arrives. Net, $4,891.06 for the month, after federal withholding, FICA, and Ohio state bracket. You don't celebrate. You refold the stub the same way you did at 17. The vesting notice comes on a Tuesday. 14,000 shares. Grant price, $12.40. Current price, $71.30. You do the math twice. $998,200 in unrealized value. Combined with base salary and the account balance you've stopped mentioning out loud, you cross 7 figures for the first time. The IRS doesn't tax what you earn, it taxes how you earned it. Your RSUs vest and get taxed as ordinary income immediately. 37% federal supplemental rate, withheld before the shares even land in your account. But the growth after vesting, if you hold past 1 year, gets taxed at 15% long-term capital gains instead. Ellis calls that weekend. He took the all-cash comp package 2 years ago. New truck in the driveway. He never asked why you didn't do the same. Sell it all, he says. Lock in the number. Why would you gamble $1 million on a stock chart? You don't answer right away. Your thumb hovers over the trading app. One tap sells everything at ordinary adjacent short-term rates. One tap does nothing. This is the moment everything before it built toward. You close the app. You don't call Ellis back that night. You stop optimizing for take-home pay. You start optimizing for holding period. Same law, different doors. Ellis posts a photo of the truck. You don't like it. You don't comment. Your silence isn't cold. It's arithmetic still running. 31 years later. A conference room on the 40th floor. $100 million across entities you didn't design and mostly don't touch. Diane sets the folder down without opening it. Grantor trust documents, stepped-up basis schedules, a carried interest allocation from a fund you back but don't run. She taps one line twice with her index finger, says nothing else. At this level, the tax code isn't measuring what you made. It's measuring what you're willing to give up control of. You sign where she indicates. The trust holds the assets now, not you. You retain the income tax liability, but not the legal ownership. A structure that costs you control in exchange for keeping the estate outside your taxable estate at death. This should feel like winning. It doesn't. Milestones disappoint. You don't explain the feeling. You let it sit. The shift. You stop paying tax on income. You start paying tax on the transfer of control. Diane closes the folder. Her assistant will handle the filings. You think of Gerald's pay stub, face down on a break room table, decades gone. Same subtraction, different scale. Same law, different doors. You leave the building and stand on the sidewalk where a bus stop used to be. Somewhere behind you, a kid checks a paycheck stub for the first time, sees the gap between gross and net, and feels the hum start. Same law, different doors. The next video is your life at every salary level. $20,000 to $1 million, how everything changes. Subscribe, you're already in it.